Hey guys, this is Julie. So, what have we got going? We did our little V-shaped top here, it looks like, in the market. We're coming back down. We didn't go very far. The Globex sold off, and then we came back to fill the gap. We did not get the high on Friday. So, we have a lower high, and I think we're going to start seeing some lower lows. Usually we rally into the Fed, right? So the Fed will be meeting this week, but I don't think that's going to be the case this time, unusually. Um, we could rally into them and flatten out. Let me show you what I'm talking about. Pull up a chart here. Show you the disclaimers real quick. And then pull up this chart. So we had a very small day. We managed to, maintain stability in the market, but we're just directionless right now, pending this Federal Reserve announcement. And, they're all expected to say that the rates will be cut in June. I was kind of hoping we'd get that May cut. So let's put the 25-day on the chart, and you can see that we have, we're sitting above the 3 on the open. And if we put a 50-day on the chart, you see the problem. We are squeezed between this level. 57.16 is likely going to be the top. And that's what they're, stalling to leave a little bit of room for Wednesday. Nope, this week. Sorry, wrong one. I never know what week it is or day it is. Yep, it's Wednesday and their interest rate decision. So tomorrow we'll probably stabilize and go flat, into that area, but not get too much further than 57.16. So fill this gap, maybe leave room to wiggle around. We'll see what happens, but just be aware that, this will be a straddle. Definitely this 55.25 and the 57.16. So we're probably operating in this world between 55.25 and 57.15. And the BTIC, $21.60. So 57.16. 57.38 for the E-mini. ES. All right. So not much wiggle room to stay within that. And of course, they can wick it and come down, but you know, if they move risk out, that's going to cost them a small fortune. And we know that they're risk adverse to doing that. And for this reason, for the way that we're positioned here, um, do they go into upside tails? If we get some real strong comments from Powell, positive about the tariffs and that the number of countries that have, instituted their trade plans with the United States, everything's working out. Looks like we can drop rates, have a 3.25 to 3.5 basis point range over the next, by the end of this year. That would certainly make markets very, very happy. And we're going to get that upside move, and the dealers are going to move their risk out. So, barring that, though, it's going to come back down. It'll be a sell the event kind of thing in my mind. And, the interest rates are already pretty well organized as far as what the market has priced in. And I'll show you that. You can come over here to your quick strike platform, come in over here to your FedWatch tool, and you can see here that it's not changed for May. 95%. If we got a cut or anything for this report, it would be very probably bad. The market would take it very badly. And in fact, June is only got a 28.6%. So July has a 50%. It's just, we're getting lower and lower. It's just like the Fed has decided to abandon our market. And let me just show you our market, meaning the equities. Um, Let me show you this. So you can see that the overnight repo market is gone, right? It's basically back to zero. So they're not using the short-term contracts to buy our short-term treasury notes anymore. What happened is Berkshire Hathaway stepped in and took its place. So you see this curve all the way down? Wait till you see this curve all the way up. And it's all cash. And it's all cash, and they are getting interest. So the more cash that they amass, the more interest they make, and they won't make any interest if the Federal Reserve lowers the rates. You see what I'm saying? So the Federal Reserve is not going to lower rates so that they can keep Berkshire in the treasury market to replace the repos instead of the stocks. And to me, that's why I got so upset about it. All the hypocrisy of, Warren Buffett, of all people, Mr. Stock Guru, the US markets are the best, stay with US markets and support stocks and it will bring you wealth. They've sold out. All of the top MAGA 7 leaders and Berkshire and all of them have cashed in all their cookies, taken all their gains, and they're letting the stock market just fall to pieces because they have this in bed agreement with the Fed to go to cash and get interest rates. And so higher interest rates are going to it continues to kill the lower class Americans that rely on credit to go to the grocery store after all that high inflation and all that. So the inflation's coming down, but the cost of goods is not. You see what I'm saying? The inflation came down, but the goods stayed high because of the production cost difference. So until we can get the tariffs in to mitigate that price sticker shock or give a rebate back to consumers or however they're going to figure it out, the consumer is getting hosed triply, quadruply because they've got the high prices, the rent, the food, the everything, the cars, the insurance, everything. And the interest rates are not coming down to give them any relief whatsoever so that Warren Buffett and all the wealthy elite can get their interest rate payments because they're too afraid to grow the stock market again right now. So I'm, I don't know I don't want to sugarcoat it, but the market right now is stable. It's flat, but it's not going to go anywhere. It's just going to stay probably flat and supported in small ranges. They'll crush the volatility. But I think that well, I think it's sad that they're not allowing free market to the markets aren't really free. They're not allowing the markets to operate. They're not allowing the investors to lose money. They're not investing in the market. Warren, all that 50 years and 40 years in the past, Warren Buffett speak is out the window because he's no longer supporting the market. He's supporting interest rates for his global elite customers, people who can afford Berkshire Hathaway. I mean, who can afford to get a share of their stock anyway, right? If you can, is it even available anymore? Um, can you even buy it? Um, that is an interesting question. How much is a share of B? 47,000. No, I thought it was like 47,000 or something. Must be on crack or something. Okay, this is 47.46 per share. What? That's not right. Okay, well, if it's only 500 a share, that's not as bad as I thought. But I thought it was a lot. What are their A? Their A shares are not available. That's what it is. There it is. That's what I thought. It's 809,000 per share. That's what I thought for Class A shares. Okay. It's like, there's no way, that person would be able to buy a share of stock from them. So, unless you got in early and then they've just held on to it. That's what all those hodlers hold on for dear life. Berkshire started it. So they're all getting interest. They're all happy. I guess they're happy they replaced the repo market. But this is a fundamental distinction. If the foreign investors have departed our treasury market and it's now just the Federal Reserve being one third of the buyer of short term debt, the other one third is the Treasury Department. So we have Treasury and Fed both now buying treasuries, and one third left for the public. That's not a very stable market. And so we have to address why we're even doing this system and why are we still sending 100 million a week to EU is even the more pressing question I have in the back of my mind. They're supposed to be, investing in, keeping the dollar working in foreign markets. I don't see any GDP growth from that at all over the last 5 years or 10 years. So where has the money gone? And if it's not buying treasuries anymore, what are they doing with it? None of this makes sense to me. So maybe one day somebody will sit down with me and explain it to me. But I can tell you that it doesn't add up. And I just want to let you know that it doesn't look like they're lowering rates. It looks like they're staying high, and that's going to put a contentiousness between the president and the Federal Reserve Chair that'll have some heated, debate going forward. Deservedly so, if they're, protecting Berkshire Hathaway elite customers who could afford $800,000 a share versus Main Street Americans who are suffering with the high prices and high interest rates, or interest rates that should be closer to 3.25 to 3.5, and they're not moving down. All right, so that answers your question. I think 5720 is going to be a strong support for SPX, and if 5720 equals to 5740, maybe 5750 for the ES going into tomorrow. All right. I hope y'all have a good night, and we'll talk at you tomorrow.